So in your earnings report, I know you mentioned that given some of these uncertainties out there, the results were still quite pleasing. How confident are you in the second half?
At the moment, things are looking pretty good, Yvonne. Our biggest market is Hong Kong, and there we've had some ups and downs over the past few years. But at the moment, we're seeing quite a stable growth in our business. We're seeing mainland Chinese travelers coming back to Hong Kong, and also the international markets are quite strong too. Now, what that has enabled us to do, because we're in the super luxury space, is to increase our room rates in Hong Kong, and that's been quite pleasing to see that result. But one thing I would say is that generally, we are a very long-term looking business. You know, we're an owner as well as an operator of our hotels. You always have to look very long-term. So it's great when the cycle is looking good, but you have to live through some up and down cycles and have the staying power for the longer term.
Right. You talked about the roots that you have in Asia. You've long been known as this luxury brand in the region. What do you think is going to be the competitive advantage that you have? Is it the fact that you do know the Asian and particularly Chinese customer well than other hotels out there? Is that how you leverage all this? And how do you?
Well, the way we think is that super luxury is something to stay. The demographic mix can change from time to time. Actually, interestingly enough, 20 years ago, over 50% of the business at the Peninsula of Hong Kong was Japanese. So those trends tend to go up and down. But what we believe in is that if you commit to taking those extra steps to be super luxury, that is the product that will sustain over time.
So is it now the Chinese customer that comes to your hotels more? I mean, where do you think that they are traveling now? You say they're coming back to Hong Kong, but where else do you see that kind of traffic these days?
Right. Well, the good thing for us, the business in Hong Kong, is that it's a lot more diversified as compared to before. So when I mentioned over 50% Japanese 20 years ago, actually we're very happy that we don't have that sort of concentration anymore. It is spread, more diversified. Mainland Chinese very strong, but we still get a lot of business from the US and from Europe. Of course, everybody knows that the mainland Chinese are big travelers and they're going to many other places. But our demographics nowadays include the Middle East, Russians, South Americans, and we love it. We love having a good spread of customers.
Clement, the footprint of the peninsula is fairly small relative to the massive hotel chains of the world. How do you plan to be competitive with the Marriotts, the Hiltons, the Hyatts out there with a select fine number of hotels in the world?
Yeah. Well, actually, our business model is quite different. I touched on it a little bit earlier on when I talked about the long term. We still very much believe in being owners as well as operators of our assets. And because of that, that means we have to take a long-term approach, but also we don't have so many hotels. So we focus on a much smaller number of hotels, but in terms of the quality level and the exclusivity, we try and take that quite a bit higher than the other brands that you mentioned just now. So we only have 10 hotels which are operating around the world at the moment. We have 3 new hotels which are under development. But luckily, we believe that the 10 hotels have given us a very strong brand name in that super luxury space.
One thing that Yvonne had mentioned there is the localization or knowing the Asian consumer. Here in New York, I've been to the Peninsula Hotel. It is there, but it also gets lost among all the other hotels here. It's not Asian localization that's happening here. It's trying to make a name, trying to fight for that space here. How do you intend to do that to make it even more prominent?
Well, we really don't think of sort of this Asian localization. As I said, it is much more that by focusing on that quality, I think we're all aware now that there is that super wealthy affordability amongst quite a few different demographic segment groups. And so we are seeing that top-end business come from China, as I mentioned, Middle East, and a number of other places as well. We truly believe that in the world of increasing supply, so many new hotels being built, even Airbnbs entering the equation and so on, that there is a segment that would pay that premium price for something super luxury.
So you don't see any kind of M&A opportunities here just to kind of scale up the business? It seems like now in the industry, it's quite critical now to do more consolidation in order to grow.
Actually, there's one point Rami mentioned, which is quite valid, which is because of the way we do things, by staying small. The one thing is we don't get as much economy of scale in terms of growth. We have our global distribution systems, we have our advertising, we spend all of that money, but we spread that only across 10 hotels. But that's the way to keep the quality and the luxury. And that's the way we'd prefer to keep it.
You have hotels on both sides of the Pacific. How big of an impact do you see a trade war for the group here? In particular, if we see less trade between the U.S. and China nations, does that mean less business travel, for example?
There's no doubt that a full-scale trade war would not be beneficial for us. Our business relies on more flow of people, people coming to trade, coming to invest, and clearly we would hope that doesn't happen. However, I would say so far we have not seen any negative impact. Our business is still going quite well, but no doubt that is not what we would prefer to see.
Is there any way that you can mitigate that? If we do start to see business travel start to slow down?
Well, one thing about Peninsula is because we focus on this super quality, actually, our mix of business tends to be quite a lot leisure as well as business. In most of our hotels, leisure would be 50% or more. Now, I do believe that this super luxury travel will continue because a lot of wealth has already been created and people have the income. But nevertheless, for sure, we would prefer to see more trade and more people movement for business purposes.
Yeah, I want to bring it back to the consolidation that we've been seeing, because SPG, Marriott, of course, the two merged already, but their loyalty programs, they start to merge, I think, just 2 weeks from now. If you're combining these two loyalty programs, we're talking about, what, 100 million members worldwide. Does that force you to rethink your loyalty program in any way?
That's really not the business, the customer segment that we compete with. I think the best way to describe our customer, actually, we use this word called the unmanaged traveler. And why would that be unmanaged? These are the travelers who can make the specific decisions as to which hotel they want to stay at. So typically, these would be high net worth individuals, CEOs, who know which is their favorite hotel in each city, and they would go back to that hotel. If you're trying to attract people through points or rewards or that sort of incentive, that's not really our customer segment.
Finally, last question here, Clement. Where else can you expand the Peninsula brand? Are you looking for other cities?
We're building in 3 cities at the moment, which are London, Istanbul, and Yangon in Myanmar. These 3 projects are taking up a lot of our resources and our time, and we're quite happy to go with these 3. That would take us from 10 to 13 hotels. And as I said, as a long-term owner-operator, that's a reasonable portfolio to have.